Stars. Hey everyone, here is Tanya Singla. If you didn't yet subscribe my channel, so please do it fast, and for subscription you are required to press on the bell icon. Today's topic of discussion is financial planning. After we have studied what is financial management, now we are going to study financial planning. Financial planning, as the name suggests, financial planning means it shows that planning related to finance. So let's start. Financial planning is very important whether the business is small or big. Even though existing business need very we can say very much planning, because they are need to procurement of their funds for better utilization, because they want to raise their company level up. So that is why financial planning is very important for every organization, whether big or small, whether new or an existing company. Every organization need financial planning for better utilization of their fund and procurement of their organization. So let's start with the meaning of financial planning. Well, different authors give different view regarding the financial planning. So let's start with the narrow concept of financial planning and broader concept of financial planning. So let's start with the narrow concept of financial planning. What was that? What was the narrow concept of financial planning? In the narrow concept, there are two views. According to first one, they consider as financial planning that it means forecasting, or we can say financial requirement of the business. But according to second view, they consider financial planning as defining the capital structure of a business. But means we can say second opinion, according to second view, financial planning is related to capital structure, determining the proportion in which the fund are to be raised by various sources such as equity, preference, share, debenture, etc. Both of these views were studied. In first one, they are in the view that financial planning is relating to forecasting of the financial requirement, and in second view, they are in the opinion that it includes capital structure of the that they determine the capital structure of the organization business. But they both ignores each other, because in first view only they consider forecasting of the financial business, and in second view they only consider capital structure. They didn't we can say merge they didn't we can say both point of view. They didn't consider both point of view, so that second view ignores the estimation of financial requirement. So let's start. That is why broader concept of financial planning come into existence, because it does not fulfill the only need of financial planning, as one view include only the determination of capital structure, and second one include only the forecasting of financial planning. So let's start with the broader concept of financial planning. In broader concept, financial planning means estimation of financial requirement and determination of capital structure. In this both view are coming. That first one is regarding the future forecasting of forecasting the financial requirement, and second view was capital structure, determination of determining the capital structure. But in broader concept, we get the both in one. So this was considered as the financial planning. This is considered as the meaning of financial planning, in which we include estimating the financial requirement of business, determining of determination of capital structure, to establish the policy to be pursued for the flotation of various securities, to establish and maintain a system of financial control governing the allocation of utilizing fund. So this is the meaning. This was the meaning of financial planning, that include both financial requirement as well as determination of capital structure too. So we consider broader concept of financial planning, in which we have both point of view regarding the determination of financial requirement, or forecasting of financial requirement and determination of capital structure. So now let's study the types of financial planning. We have three types of financial planning: short-term financial planning, medium-term financial planning, and long-term financial planning. So let's start with the short-term financial planning. The financial plan which are normally prepared for less than we can say for a period of 1 year are known as short-term financial plans. These are also terms as budgets and profit planning. These are actually a part of medium-term and long-term plans. Short-term plan is actually a part of medium and long-term financial plan. Short-term financial plan are related to the planning of working capital. How they generate the working capital and from where they will use the source of working capital. So estimation of working capital requirement and determination of the source from which is to be arranged. So the basic objective of the short-term financial plan is to maintain sufficient liquidity in the business. For this purpose, they prepared many budgets, or we can say many budgets as sales budget, cash sales budget, then cash budget, etc. Or we can say profit and loss statement, account, projected balance sheet, fund flow statement, cash flow statement are prepared. So this was all about the short-term financial plan, which are considered for only 1 year, in which we only study the working capital requirement and in which we study the working capital requirement of the organization, and it include the estimation of working capital requirement and determination of the source from which it's to be generated. So this was known as short-term financial plan. Medium-term financial planning. What is medium-term financial planning? In short term, only the period of 1 year was considered as short-term financial planning, but in medium term, we consider more than 1 year, but less than 5 or 7 year. We consider as medium-term financial planning. These are related to providing medium-term funds for the business, and medium-term fund are required for maintenance of asset, acquiring additional tool, equipments, running of research and development activities, and so on. So these are considered as medium term financial planning. Now let's talk about long term financial planning. Long term financial plan means more than 5 or 7 year, we consider as long term financial planning, in which we plan about long term sources, or we can say for long term point of view, in which we make the policies of the organization, capitalization, capital structure, replacement of fixed asset, and so on, which are related to long term, which generally include the period of more than 5 to 7 years. So these are all are the type of financial planning: short term financial plan, medium term financial plan, and long term financial plan. Financial planning, let's come to the procedure of financial planning. Let's start with the procedure of financial plan. So following are the procedure of financial plan. First one is determination of financial objective. For the purpose of preparing an effective financial plan, we are required to determine the financial objective, whether the objective for short term objective or long term objective. We should consider first of all the need. We can say the company want to determine its short term objective or long term objective. In short term objective, we talk about the liquidity of the funds, maintaining the market standing of the firm, maintenance of sale, etc. But in long term objective, it we include that maximization of shareholder wealth, production and minimum cost. So these objectives should be very clear, so that the plans may make according to their objectives, that their objective is for short term or for long term. Now formation of financial policies. After the making the objective that it is for short term or long term, on the basis of those objectives we are able to make the policies and procedure. Now formation of financial policies. This is the second step of financial planning, the formation of financial policies. So policies act as a guideline for the procurement, allocation, and effective utilization of fund of the organization. These are generally formed by the top level management with the advice of financial manager, as you know, regarding the finance. So that is why the policy may be regarding capitalization, capital structure, trading on equity, fixed asset management, working capital management, and so on. So these are the formation of financial policies. Now formation of procedure. This is the third step after financial objective policies. Now we have third step, which is procedure. It should be very clear that which person has to do which work. Now every subordinate should be clear their work according to their organization, so that they can easily achieve the objective. So formation of procedure is that uh, each subordinate must know what he is required to do. Financial executive decide about the control system, establish the standard of performance, and compare the actual performance with the standard to ascertain the deviation and their causes. So these are necessary steps are taken to control the deviation. Now provision of flexibility. After studying objective policies and procedure, we consider our fourth and final step, which is flexibility. Financial planning is a continuous process, and hence there should be proper flexibility in the financial objective policies and procedure, so that they may be revised or thoroughly overhauled according to the changing circumstances. That is why we say they should be flexible. So these are all the procedure of financial planning. Let's consider once again: determination of financial objective, formation of financial policies, formation of procedure, and provision of flexibility. So all these are the points of procedure of financial planning. Procedure of financial planning, let's move to the characteristics or principle of sound financial planning. So these are the characteristics or principle of sound financial plans, which you can write to. So let's start with the first one: simplicity. A financial plan should be simple so that it may be easily understandable by everyone. It should be a simple capital structure capable is being managed easily so that everyone can easily understand, our shareholder or the person those are interested in our company. So it should be simplicity. It includes simplicity. Now foresight. Financial plan should be made should be made to keep in view the future needs. For example, that our production of future. Regarding this, all these are so these are the characteristics that foresight. It should include future needs, which also fulfill our future needs too. So that is why foresight. Now flexibility. Why we say that financial plan should be flexible? Because future is uncertain, as we all know that we cannot clearly said anything regarding the future. We can only predict. So flexibility is very necessary in financial plan, because sometime many plans changes according to the need or according to the government strategies. So it should be flexible. Now liquidity. Why we say that it should also include liquidity? Because liquidity means the ability of the enterprise to pay off its day-to-day expenses and other short-term liabilities on time. So that is why a company should have the liquidity level, which they can help the organization as well as their members too. Now economical. Financial plan must be prepared in such a way so that the cost of capital is minimum and the average cost of capital will be minimum when a fair balance is maintained between debt fund and on capital. Now, contingencies. Contingencies mean requirement of fund for unseen event. It should be keep in view the requirement of fund for contingency. So, now adequate. Adequate system of control. A financial plan should establish and maintain a proper system of financial control. And suitable, last one characteristic, last but not the least, a characteristics of financial plan. It should be suitable to every organization or to every we can say to every place or in every environment. So financial plan should be suitable. It does not mean that we are making financial plan the whole thing will be according to our needs. So it should be made in a view that it may be suitable to all type of organization. So all these are the characteristics of the financial plan. Let's recall them again: simplicity, foresight, which include future, flexibility, liquidity, economical, contingencies, adequate, and suitable. Now let's start. After studying the characteristics, let's come on the factor affecting of financial planning. First one, nature of business. Why we say so that nature of business also affect financial plan? Because we also require to know that nature of business, which type of business we are doing, whether it's manufacturing business or trading business. If we are going with the manufacturing business, then we are required more fund, more finance. And if we are taking with going with trading business, then we require less finance than manufacturing finance. So nature of business also affect the financial planning. Now degree of risk. Degree of risk, in every business risk is involved, because without risk we cannot do any kind of business. It depends on the business type, that which type of business we are doing. So if we say that the enterprise with the stable sale and earnings can employ more amount of debt and hence can take the advantage of trading on equity. So these are the all regarding to the degree of risk. Now standing of concern. Credit standing of concern among investors affect the financial planning to a great extent. Credit standing of concern is determined by number of factors such as age of the firm, its goodwill, its past performance, its size, its market area, reputation. All these are included in standing of concern. Now, plans for future growth. The plan for future growth and expansion of the firm also affect the financial need, because financial planning, because we are sometimes we all know that we are human being, and human being mind is very moody, or we can say they go on changing according to the need, according to the strategy formulated by the government and so on. So plans for future growth are made in such a way so that they can, apply to whole of the plans regarding we made according to our need. Now, alteration source of finance. Alteration source of finance, we should have the alteration. We should have the more we can say more types, or we can many places from which we can generate the fund. So that is why we say the alteration source of fund. Now, government policies and control also affect the financial planning, because we are not able to fix the government mind according to the business policies rules. We can only predict them. For example, let's consider an example that there is an secret information that government is going to decrease the tax on petrol by 5%, and one of the company import the petrol in a bulk quantity, because of the tax is going to be decreased, and the result, when he import the petrol, at the time government increase the tax rate. So we cannot fix the government mind or government policies. We can only predict them. So that is why we say that government policy and control also affect the financial planning. Now, change in technology also affect the financial planning, because we are seeing that many innovating technology are coming into marketing. Now we can take the example of mobile phones. In previous time, firstly we have the keypad mobile, then Android phone comes. Now we have the KitKat model and another types of software inbuilt in the phones, and the phone size is also increased. Now we don't like the small display phones. We need 5-inch, 6-inch display phones. Like now we also need the brand. Like in India, MI phones are very popular, but what are the fantasy of each student is to take an iPhone. They always wanted to be purchase an iPhone. So these are the change in technology. Now, attitude of management. Attitude of management toward risk and control. The management is of risk taking, it will employ more amount of. On the contrary, if it is conservation nature, it will employ more amount of equity capital. So all these are the attitude of management. So these all are the factors which affect the financial planning. Let's recall them again: nature of business, degree of risk, standing of concern, and for future growth, alteration source of finance, growth policy and control, change in technology, and attitude of management. Financial planning now helpful in efficient operation of business activity. Why we say so that financial planning helps us in effective operation of business activity? Because financial plan help us to generate funds, which automatically help us in optimum utilization of organization, or we can say helpful and efficient operation of business activity. Now, ensure liquidity. Financial plan work and liquidity. What we mean about liquidity? Liquidity means ability of the firm to pay its short-term debts on time. Now, a firm needs sufficient finance to meet its day-to-day expenses, and therefore the purchase financial planning ensure the necessary liquidity throughout the year. Now, helpful in proper capitalization. Financial plan helps in proper capitalization, because it does not only talk about the present as well as also about future requirement of capital fund. So that is why we say that it helps in proper capitalization. Now, helpful in proper utilization of fund. Same the case of the proper capitalization, that as it does not only consider to a short term, as well as it also make there we can say that it also arranged for the future needs. So that is why we say that helpful in proper utilization of fund. Now, helpful in expansion of business. Financial plan automatically help us in expansion of business, because of the fund. Because if we are having the funds, good funds in our organization, it will also help us in expanding our growth of business from we can say from down to top. Now, helpful in proper capital structure. Financial planning determine a common capital structure. Optimum capital structure means the raising of finance from debt and equity in such a proportion that the cost of capital is minimum and the value of firm is maximum. So all these are the important significance of financial planning, helpful in efficient operation of business activity, ensure liquidity, helpful in proper capitalization, helpful in proper utilization of fund, helpful in expansion of business, helpful in proper capital structure. Now, determination of financial need of a business. Need of business. Now, estimating or determination of financial requirement of business is one of the main objective of financial planning. Before raising fund, it is essential that requirement of fund to be correctly estimated, because in the absence of correct estimation, the firm may suffer either from inadequate or from surplus fund. Requirement of business can broadly be classified into two main categories. They are like fixed capital requirement and working capital requirement. Now, first of all, we'll talk about fixed capital requirement. As the name suggests, fixed capital, which we consider as fixed capital, like our assets, which are for long term. So, fixed capital is meant for fulfilling permanent or long term needs of business. In other words, we can say that fixed capital may be they may be tangible assets such as land, building, plant and machinery, furniture, etc. They are considered as fixed asset. Intangible asset like goodwill, patent, copyright, etc. All these are fixed capital requirement. Certain amount of fixed capital is also required for meeting certain not landing creation of an asset like research expenses, promotional expenses incurred from establishment of business, and so on. So all these are the fixed capital. Now, and why we need fixed capital requirement? Fixed capital requirement is needed for the growing of the business, whether the business is small or big. We require fixed capital. Now, there are factors affecting the estimation of fixed capital: internal factor and external factor. Internal factor are those factors which are closely related to the organization, and external factor are those factors those have no those are not under the control of the organization. They are they are belong to external sources. Now, nature of the business also affect the estimation of fixed capital, because whether the business is manufacturing or trading, it depends on the fixed capital requirement. If the business is regarding manufacturing, then it required more fixed capital, and if the business is of manufacturing nature, then trading nature, then it required less capital. Now, size of the business also affect the estimation of fixed capital. If the business is small, then it required less fixed capital. If large, then it required more fixed capital. Now, types of product. If the company is making the same product, then it required less fixed capital. And if the company is making different products, for example, like the example of Samsung, it making the phones, then refrigerator, then TVs, and AC, so on. So in this type of business, it requires more fixed capital. Activity undertaken by enterprise. If the activities undertaken by enterprise is concerned which is engaged in the manufacturing of all part of product by itself, will require greater amount of fixed capital, and vice versa. Mode of acquisition of fixed asset. If some of the fixed assets are available on lease, or a higher lesser amount of the fixed capital will be required. On the contrary, all the fixed asset for the purchase or immediate cash payment, larger amount of fixed capital will be needed. Now, acquisition of old asset. In certain industries, old plant and machinery may be available at sufficiently reduced price and which can be used satisfactorily. It would be reduce the requirement of fixed capital to a great extent, but old plant and machinery should be used in the industry where the technology change are moderate or slow. Now, external factor, general economic outlook. Um, if the company is if the we can say if the market is going facing the situation of depression in the market, then general economic outlook also affect the fixed capital requirement. We cannot fix that there will be always boom in the market. We can only predict that. Now, technology changes, many new technology are coming into market, and we cannot fix that this technology will be stay for longer time. Many new technology can come and the old one get old, and so that the requirement of fixed capital increases. Degree of competition. Many new industries are entering in the market, which also affect the estimation of fixed capital. Shift in consumer preference. Consumer is now have the full right what he want to choose. Now there are a number of choices regarding their products in the market. Now he is not only we can say he is not fixed to purchase a certain company product. He have many different product of different companies producing the same product. That is why shift in consumer preference. So all these are the factor affecting the estimation of fixed capital. Financial need of business is working capital requirement. After studying the requirement of fixed capital requirement, now we are going to study working capital requirement. What is working capital? Current asset minus current liability is equal to working capital. So working capital may be fixed or fluctuating. Fixed working capital refers to the minimum amount which would always be invested in raw material, work in progress, finished goods, and cash balances. The amount is absolutely essential throughout the year for continuous basis to maintain a desirable level of business. So the requirement of working capital over and above fixed working capital is known as fluctuating working capital. It keeps on fluctuating from time to time according to the changes in the level of business activity. For instance, during peak season, due to intensive sale, more funds are brought in stock and data, and thus more amount will be required for fluctuating working capital. So all this about the determination of financial need of business, in which we have studied fixed capital requirement and working capital requirement. Thanks for watching video. Please like, share and subscribe my channel. Stars.